go. She stopped at 100.
With fuel prices hitting unimaginable heights and the nation's oil giants preparing to report what are expected to be huge second quarter profits, you may be asking yourself, what are they doing with all that money? According to researchers at Rice University, the bulk of that cash was not spent in exploration, but on stock buybacks and shareholder dividends. Rice's data show that Exxon Mobil, Chevron, ConocoPhillips, Royal Dutch Shell, and BP spent roughly 55% of their operating cash flow last year buying back shares and paying dividends. Meanwhile, the money they spent to find new deposits of fossil fuels has for several years remained relatively flat, with percentages in the mid-single digits.
The oil companies are under no obligation to anyone but their shareholders, and analysts and industry experts will tell you it would be irresponsible of them to do anything like risky exploration in areas where they don't know for sure that there's oil. So while this profit keeps piling in, the only thing that they can really do is pay it out to shareholders. The argument is that they spend more on alternative energy or other sources of energy, but that's not what these companies are. They're oil companies.
If, as expected, the oil giants report eye-popping second quarter earnings, those results will almost certainly lead to another public outcry and perhaps another visit before Congress for the oil executives. Mark Hamrick, The Associated Press.